Hi everyone. So welcome to the stream today. Very much excited for having you. Today we're looking at one of the critical topics in taxation and fiscal policy, and by extension in taxation in general. And we're looking at Withholding Tax Administration under the Income Tax Act 2015, Act 896. So if you're watching, you make sure that you share the video with others, and let's reach as much students as possible in the stream today. Okay, so comment below with any questions you have, and let's see how we can reach as much students as possible. This is one of the critical topics that you must understand. Per syllabus grading is about 15% of your syllabus grading for principle of taxation. So comment below any questions you have, anything you want me to cover more. Maybe you are studying something and you want some clarity on what you are studying, or there is something you want me to share my thoughts on, or there is a question you want to ask me. All you need to do is to put it in the comment box. But I'll be much grateful as well if you share the video with others, or you can also host a watch party with a live stream so that we can reach as much students as possible. I just finished with a live stream on my YouTube channel, and I was teaching on corporate tax liabilities. So for those of you guys who have not watched that video as well, I just finished a stream on that corporate tax liabilities, explaining the principles and the concepts that you must understand about corporate tax liability. So after watching this, you can also watch that as well on my YouTube channel. And remember to subscribe to my YouTube channel, and also hit the notification icon and continue to share the video so we can reach as much students as possible in relation to that. So Withholding Tax Administration in Ghana, Withholding Tax Administration in Ghana. Now, so you realize that this is, like I said, one of the critical areas that we must understand when it comes to taxation in Ghana. When it comes to dealing with taxation in Ghana. But a big question we ask ourselves is, why is it something that we need to look out for? Why is it something that we need to be thinking about? Now, most of the times what happens is that right. So most of the times what happens is that organizations make payments for goods and services and works. Now, if you make payment for goods and services or works, we expect that, yes, definitely the people to whom you made the payment for, they receive an income. So on that income that they have received, they are supposed to pay tax on the income that they have received. But there are some time when the people who are receiving the income may not be able to make the payment, or may not be going to pay the tax that we are supposed to pay. So the Tax Act requires that when we make payment for certain activities, certain things, we have to withhold part of the tax. So for instance, if I owe you, or let's say I owe you 100,000 Ghana cedis, and maybe it's for service. We will look at the rates later on. We will look at all the rates later on as we continue with our discussion. But I owe you for $100,000, and I'm paying you the $100,000. I'm not supposed to pay you all the $100,000. I'm supposed to retain a percentage of that, either 3.5% or 7% or 5% in relation to that, depending on whether it is goods, services, or works in that case. So it is that concept of withholding that amount of money, and also to ensure that more money is received by the tax authority in order to administer the country properly. That is why the issue about withholding tax comes to being. But before we get into some of those things, there are three key issues that we must understand and that we must always define when it comes to dealing with withholding tax, because these are the key things that will be running throughout our discussion. The first one is goods, the second one is works, and then the third one is services in relation to that. So when we say goods, what do we mean? When we say services, what do we mean? When we say works, what do we actually mean? So let's look at the definitions of these things in relation to that. So first one, goods. So goods in general, we say that any object of every kind and description, including raw materials, products and equipment, and objects in solid, liquid, or gaseous form. So any tangible assets apart from land and money can be referred to as what? Goods. So like you can see, let me pick and annotate what I'm reading out so you know where I am reading at. So goods include what? Movable tangible properties, thermal and electricity, energy, heating, gas, refrigeration, air conditioning, water, but does not include money. And I've already mentioned that in relation to that. So any fixed assets that apart from land and money, it's referred to as what? Goods in relation to that. Then let's go to the second thing, works. So when we say works, what do we mean by works? When we say works, what do we mean by that? So let's go, works. Works is defined to include work associated with the construction, reconstruction, demolition, repairs, or innovation of a building, structure, or surface, and includes site preparation, excavation, erection, including erection of uh, uh, mast for telecommunication businesses, assembly, installation. So anything of this nature is what we refer to as what? Works. So in this context, excavation relates to removal of the earth, cutting, digging, scoping during construction work. So that is the second key item that we need to define when it comes to withholding tax works. Then we come to services. Service means the furnishing of labor, time, or effort not involving the delivery of a specific end product other than reports which are merely incidental to the required performance and includes consulting, professional and technical services, but does not include employment agreement or collective bargaining agreement. So that is also about services. Now, in case you are asking, Nhyira, what notes are you using here? This is actually from my book on advanced taxation. I have a book on advanced taxation, and that is where I'm taking all of these things from in relation to that. So what is a withholding obligation? Now, the provision of the Act requires a resident person who pays an amount for works or the supply of goods and services to another resident or non-resident person with a source in Ghana to withhold tax from the payment at the rate specified under paragraph 8 of the first schedule to the Act and pay the same to the Commissioner General. Like I said, we'll be looking at the rates much later on. So the Act requires that any resident person that is making a payment for services, for works, for goods to another resident person or a non-resident person, as far as the source is in Ghana, must withhold what? A tax on it at an appropriate rate. And like I said, we'll go through the rates later on in relation to that. But if you withhold the tax, it's not for you. So like I said, I'm supposed to pay you $100,000, but I'm withholding 3%, which is $3,000. So I'm going to pay you $97,000. That $3,000 that I've withheld as an entity, as a company, I'm supposed to remit that to what? The Commissioner General in relation to that. So that is an obligation that the Act makes provision for that we are supposed to look out for. Now, when it comes to dealing with the issue about withholding taxes, and now, if you have any questions, you know what to do. Put it in the comment box, you put it in the chat box. I want to hear from you guys. Whatever questions you have, you can put it in the comment box and also share the video. Give us a thumbs up on this video. Make it more engaging so that the Facebook will push it to as much people as possible so we can get many people learning this much important topic. When we are dealing with the issue about withholding tax, we can deal with it from various angles. And so we want to look at withholding tax on various items and various services and various engagements in relation to that. So the first thing that we have there is withholding tax from investment returns. So when you make an investment and you are receiving returns from that investment, if we pay you that returns, the Act requires that what? We withhold an amount on that in relation to that. It could be 8% or whatever rate. We'll be looking at the rate later on, like I said. So let's look at what the Act says and what the law mentioned about withholding tax on investment. So a resident person is required to withhold tax at a rate specified under paragraph 8 of the first schedule of the Act when making payment to another person of the following returns on investment which has a source in Ghana. So when a resident person, now you see in tax, when we say a person or when we say a tax person, it can be a body corporate, a company, an individual, okay? And in this context, certainly we are talking about what? Companies in relation to that. So when someone makes an investment and we are paying the person returns on that investment, the Act requires that we are supposed to what? Withhold tax on the amount that we are paying. So this amount includes issues such as dividends, interest, lottery winning, natural resource payments, rent or royalties. We will go into the withholding tax rate on all of these things later on, but there are a couple of exceptions that you must understand. For instance, when a resident company owns more than 25% share in another company, then when they pay dividend, that dividend will not be subject to the 8% withholding tax. However, when the company owes less than 25% in the company, then when they pay dividend, 8% will be withheld on the dividend in relation to that as a withholding tax. So this is a question actually that the examiner can ask you when it comes to dealing with that. So for instance, the shareholders are considering buying shares in a company, and they are considering buying shares like 15% or buying, they are considering buying 15%. So for tax purposes, advise them whether they should buy 15% or what they should do. Now, if they should buy 15%, it means that whatever investment they make, there is a tax consequences that they must pay for the receipts that they are having on that investment. So if they buy 15% share, it means that since it is less than 15%, they are supposed less than 25%. When the dividends are paid, they will withhold 8% on that dividend. However, if we buy more than 25%, then certainly we are escaped from there and we're not going to be paying the withholding tax for residence companies in relation to that. So these things that we've listed here, there are a couple of exceptions about them, and we'll be looking at them as we continue with the discussion in that case. Now, there is no amount set as a threshold limiting the withholding tax in respect of any of the above listed other than payment of lotto winnings, in which case there will be no tax withheld where the amount payable does not exceed 2,592. So for lottery winnings, if you are making payments and the amount is less than 2,592, there will not be any withholding tax, but other ones, there will be withholding tax on them in relation to that. But there is also an exclusion from these kind of returns. Now, remember, one of the things that a law has been passed by Parliament and it has been included in the Act, in the Tax Act of Ghana, that all investors who invest in one district, one factory, whatever dividend, interest, or income they will be receiving is exempted from tax. Okay, so even though that is an income from investment, you don't charge any withholding tax on it, and that is a principle you must understand. So let's look at a couple of exclusions of items from the withholding tax. Number one, so let me pick and highlight that. So we're looking at this exclusions. The obligation to withhold tax from returns on investment does not apply to the following. One, payments that are subject to withholding tax under employment income. So any payments that are subject to withholding tax under employment income, you don't we withhold any tax on them. So for instance, when we are determining the income tax liabilities and you give people bonus, like there is a condition as far as the person is a junior staff and the salary doesn't exceed, is it 2,500? No, 1,000, 18,000 Ghana cedis per year. In that case, got to be careful about that. Yeah, I think 18,000 Ghana cedis per year. Then it means that we have to add it. If it exceeds, then we have to add the excess back to his income in relation to that. So, but then as far as it is less than that in relation to that, then we are not going to be looking at the withholding tax in that case. Two, the payment by an individual, unless the payment is made by the individual in conducting a business. So if I am making a payment, let's say I rent an apartment for my private residence and I'm paying the landlord my rent, I can't what? Say I'm withholding tax because I'm an individual. However, if I am renting it to do a business, then I may withhold tax on the amount that I'm paying in relation to that. Interest paid to a resident financial institution, definitely that is also exempted. And then payments that are exempt amounts, like I mentioned, there are certain payments that are traditionally exempt amounts, and we are not supposed to look at them in the light of any thing about withholding tax. Then there is also something that you must understand. The Act under the provision of Section 115 thus requires all persons, including individuals conducting business, to withhold tax on payments they make in respect of returns from investment. So whatever thing, as far as we are a business or individual in a business, we are required to what? Withhold tax on the payments that we are making as far as it is a returns on investment in relation to that. Then the next slide we want to look at is withholding tax on payment of services fee with a source in Ghana to a resident individual. So an individual renders a service to us and we are paying that individual, all right? And the source of the service is in Ghana and we are paying that individual. The question we ask ourselves is, what does the Act say? What does the tax law say about that? So let's look at what the tax law says. Let's look at what the tax law says. The Act under the provision of subsection 1 of Section 116 requires a resident person to withhold tax at the rates provided in paragraph 8 of the first schedule, where that person pays a service fee with a source in Ghana to another resident individual. So what are these service fees? One, fees or allowances to a resident director, manager, trustee, or board member of a company or a trust. We must withhold tax. So they are rendering their services to us. Yes, it is great that they are rendering their services, but whatever fee we give them, whatever allowance we give them, we must withhold what? Tax on it. And we'll look at these tax rates later on, like I mentioned, in relation to that. Next one, for part-time teaching, lecturing, examining, invigilation, or supervising an examination. So this one, to part-time teachers, we must what? We don't tax on any payment that we give them in relation to that. As an endorsement fee, so maybe you become an ambassador, you are endorsing any product, and they give you some money under that deal. The money that they are supposed to give you, you are required to what? Pay tax in relation to that. It is for that reason why a lot of individuals in advanced country, where there is a huge tax on some of these endorsement deals, they decide not to take the money, but they would rather take an equity stake in the business instead. I hope you get the concept. So like, for instance, if I sign an endorsement deal and it is say 100,000 Ghana cedis and the tax rate is humongous, and the tax rate is somewhere around the issue in relation to say maybe 30%. That means for the 100,000 Ghana cedis, I'm going to give 30,000 Ghana cedis to the government. So in order for me to dodge that kind of tax, I would just tell the company, okay, for that endorsement fee that you are paying me, give it to me as a stake in your company instead, because chances are when I have a stake in the company, I will now be receiving dividends, and I will not be paying as much tax as I'm supposed to be paying in relation to that. But what I just said is about tax planning, okay? What I've just said is about tax planning, and it's only various individuals who really have experts who are planning their tax for them that will be able to do some of these things in relation to that. But the average so-called celebrity or whatsoever they call them, they would just take the money and pay a huge tax and just work for the government in relation to that. Next one. As a commission to a resident lotto receiver or agent, so commission to a lotto receiver or agent, whatever commission we pay to them, there has to be a withholding tax on that. Then commission to a sales or canvassing agent, definitely you're a salesperson, we are paying you, we are supposed to withhold some tax. A commission to an insurance sales or canvassing agent, to any other supply of services or for any other works in relation to that. Here also, there are no threshold that we have in relation to the limits to which we have to charge or we don't have to charge when it comes to services in relation to that. So we won't say, okay, endorsement fees below this, it is exempted from tax. Endorsement fees above this is this tax. No, once it's an endorsement fee, it's a services, we're going to be charging your withholding tax on it in relation to that. Now, the provision requires all resident persons, whether a company, trust, partnership, or an individual, to withhold tax on payment of a service fee with a source in the country to a resident individual. So as far as what we are doing is a source in Ghana, we are supposed to withhold the tax for the service that they are rendering for us, for the payment we are giving them in return. Then the next one, which is actually the crux of our topic, is the issue in relation to withholding from the supply or the use of goods or the supply of services or the supply of work. Let me pick and annotate that real quick. So a resident person, so this is where we are. So a resident person other than an individual shall withhold tax on the gross amount of a payment at the rate provided for in the first schedule when the person makes a payment to another resident person. Now, the gross amount, because you got to be careful. The reason why we are interested in the gross amount is that VAT and other things may come in. So for instance, the service that I rendered for you, the value is say $10,000, or let's say Ghana cedis, 10,000 Ghana cedis. And VAT, we charge NHIL 2.5%, Get Fund 2.5%. Then we now get a taxable value. Then we charge 12.5% for the VAT in relation to that. Then we'll get a tax invoice value. That is what we're going to be giving out. But that's what I'm going to be giving to you. But when you are now paying me, you will withhold tax on not on the taxable value, that is the final figure, but on the gross amount, which is the value for the service, which is the $10,000. The reason is that the NHIL, the Get Fund, and the VAT, I'm going to be paying those amounts. I'm also indirectly taking those from you and paying it to the Commissioner General, and you will also take or withhold 8% or 3.7% or 5% or 3.5% from my gross payment of 10,000 in relation to that. I believe you are getting the concept. If there are any questions, you can put it in the comment box and I'll be answering all your comments for you in relation to that. All right, next. Okay, so now for the supply, the provision of works and services, all of these, but this is the key thing you got to understand. This is the key thing. Let me underline that. The supply of services, works, and goods where the contract exceeds 2,000 currency points. Now, 2,000 currency points is the same as 2,000 Ghana cedis. So that is the threshold. That is the threshold. But you got to be careful here. Now, if it is a one-time transaction and it is 1,005 cedis, you cannot withhold tax on the 1,005 because it is below the 2,000 currency points. But if I did 3 different transactions, I want you to get this very well. If during the year under consideration, I did 3 different transactions with you. The first one was 1,005, you can't withhold tax on it. The second one was 1,000, you can't withhold tax on it. But if you now check cumulatively, I have done how much for you? 2,500. So cumulatively, you have to withhold tax on what? That cumulative amount in relation to that. So that is very, very important. So anything that is going to be now exceeding it, the 2,000, then you are going to be what? Charging the VAT on it. So if it is less than 2,000 and it's a one-time transaction, no P. But if there is a consecutive or repeated transactions, then cumulatively, if it is exceeding the 2,000, then we are going to be what? Withholding the tax on it. And this is something that tricks students a lot. And so you got to make sure you understand this concept very well in relation to that. But in a one-time transaction, as far as it is below 2,000 currency points, no problem. But if it is a repetitive transactions and cumulatively it exceeds the 2,000 currency points, then we have to withhold tax on the amount as far as it is to that same individual or to that same company in the year under consideration. So that is what you have to understand when we talk about goods, services, and works. Then we move on to withholding tax on rent income. Withholding tax on rent income. Now, I gave you a glimpse of this earlier in relation to the discussion, but we're going to be taking it as well in relation to that. So listen to this carefully. A resident person who makes a payment to another resident person in respect of rental of residential or non-residential premises shall withhold tax as an investment income, and the amount of tax withheld shall be treated as a final withholding tax. Now, you see, there are 2 things you got to understand when it comes to withholding tax. We have withholding tax on account, and we have withholding tax that is a final withholding tax in relation to that. So look at the first scenario we are pulling up. We are saying that if a resident person makes payment to another resident person in respect of what? Rental of residential or non-residential premises, he should withhold the tax as that is what? An investment returns, and the amount withheld will be treated as what? A final tax, meaning that the person will not include it in his chargeable income in relation to that. The person will not include it in the determination of chargeable income because the money has been deducted in that case. Now, let me take the second one, then I will now open it up for you. However, where a resident person makes payment to another resident person conducting a business of the sale or letting of a residential or non-residential premises, the payment shall be treated as a payment for the supply of services and not as a payment on investment return, and tax shall be withheld accordingly. Now, what do we mean by that? Now, what do we mean by that? So there are 2 things when it comes to rent income here, and let me explain this. If we are renting from a company or an individual whose business is that they have built properties and they are renting it out, then for such people, when we are paying them the rental income, what will we do? We will what? Withhold tax. Okay, we will withhold tax on the payment that we are giving them. Now, if we withhold tax on the payment that we are giving them, they won't treat it as a final account because that's a revenue to them. They will still include it in their income. So that kind of payment we give to them is not treated as what? A final tax, because they would be including everything again in their income tax in relation in their chargeable income for the year. However, if the person is not in the business of renting, listen to this carefully. If the person is not in the business of renting and the person has just built a house and has a property, and we are just renting it from the person, what we will do then is that we would have to what withhold the tax on that person's revenue. So it's a one-time payment, and we will hold the tax. And in that case, it's a final tax because we are treating that person's own as what? A returns on what? Investments. I believe you are getting the two. And that person will no more have to go and file any tax returns because we've already deducted it. But the sweet spot is that many a time what happens is that the landlord will be saying that they will not, because if you rented the property and it is like say $20,000 and withholding tax is say 8%, it means you will deduct 8% of the $20,000 in relation to that. Now, what they will tell you is that they still want their $20,000. So you will still pay them their $20,000. Then you will pay the 8% on the $20,000 to the Commissioner General. And they don't care. If you don't do it, another company will do it and will come for the property in relation to that. That is just a side though. But what we are saying here is that if we are renting from somebody who is in the business of renting, we will withhold tax, and their income will not be treated as what? A final withholding tax. They will still be treating, it will still be part of their chargeable income, part of their profit. But if we are renting from somebody who is not in the business of renting, then that money we give to the person will be referred to as what? An investment income. For that reason, the tax that we withheld shall be treated as what? A final withholding tax. I believe you get a concept. It's very, very important for you to get the difference between the two in relation to that. Then to my favorite area, and that is going to be the issue about branch profit. Branch profit. Now, one of the things you got to understand is that when companies, international or multinational companies, want to establish or want to expand their businesses, let's say in Ghana, they have various options. So for tax purposes, they may establish a separately legal entity. And when they establish a separately legal entity, they have to register it with the Commissioner General. They have to pay stamp duty on their stated capital. They have to pay corporate taxes and all of that in relation to that. So there are some times when they will not register it as what? A separate legal entity on its own. Rather, they will register it as what? A branch in Ghana, which will be seen as a permanent establishment, so that they will use it to run their operations here in Ghana. Now, when they are having that branch running their operations here in Ghana, they are going to be making profits. And so at the end of the day, they would want to repatriate the profit outside to the parent company, to their parent country. So the question we then ask ourselves is, how do we charge the tax on that branch profit after tax? So after they've paid the corporate tax available, any profit they are going to be withholding, repatriating, we have to withhold a tax of what? 8% on this. That is a concept about dealing with the branch profit after tax in relation to that. If it is as a separate legal entity here in Ghana, there are various laws, various acts, and for those of you doing advanced taxation, I believe that you understand this. If you are doing principle of taxation, you don't need like branch profit and this kind of things, but advanced taxation students, you need that, and I know you understand how these things work. So let's go. Branch profit. A non-resident person who carries on business in Ghana through a permanent establishment and who has earned repatriated profit shall pay tax on the repatriated profit for a basis year ending within the year of what? Assessment. Now, the tax withheld shall be a final tax on the gross amount of the earned repatriated profit and paid to the Commissioner General in accordance with what? The rate specified with the paragraph 8 in the first schedule. Like I said, we'll look at that later on, but the rate is just 8%. Where currently, where in any particular year, a permanent establishment incur losses, the law shall be carried forward in accordance with relevant section of the Act, in accordance with relevant sections of the Act. So let's look at an illustration here. Let me pick a highlighter that will enable me to be able to show you a couple of things here. So let's look at an illustration here on the branch profit. So what do we have here? We see that XYZ company or XYZ Ghana branch declares a profit after tax of 2 million Ghana cedis in 2016. So the profit they are declaring is what? 2 million Ghana cedis in 2016 year of assessment. So if that is their profit after tax, 2 million Ghana cedis, what will be the withholding tax? Simple, 8% on that 2 million Ghana cedis. So we charge 8% on this 2 million Ghana cedis, and that gives us what? 160,000 Ghana cedis. And this will be paid to the Commissioner General in relation to that. So that's the first example in dealing with withholding tax for branch profits. Let's look at another example as well, where there are other things that we need to deal with. So if you have any questions, you comment below, all right, with your questions. I'll be very much excited to answer all of your questions for you. So let's look at question 2. So let me annotate, let me pick this, and let's see. Now the question 2 is quite involving a little bit. So follow me very well about the question 2. I'm not supposed to be touching my eyes and this thing. So coronavirus. I'm just in the room, so no coronavirus here. So let's go. XYZ Ghana branch declared a loss. So I want you to follow this workings we are doing here. A loss of 500,000 Ghana cedis in 2017 year of assessment in its returns, which was confirmed by the Commissioner General. So for the year 2017, they incurred a loss of how much? 500,000 Ghana cedis. And the Commissioner General confirmed it. XYZ Limited submitted its returns for 2018 year of assessment in March 2019, and below are extracts from the returns. So below are extracts from the returns. So what do we see? Net profit per the account is 3 million Ghana cedis. Depreciation is 15,550 Ghana cedis. Then the agreed capital allowance is 14,850,000. Now, you know, when we are dealing with companies, depreciation, what do? We add it back to their profit, and then we will less what? Capital allowance, because the tax authority or the Commissioner General does not know depreciation. So the depreciation will be disallowed, hence it has to be added back to the profit, and then we will subtract the the capital allowance. Then we will now get a chargeable income. On that chargeable income, we will charge a tax of 25%. We will less that tax 25% from the chargeable income, and that will give us the profit after tax at the end of the day. And then on that profit after tax, we now compute 8% of it. All right. So enough of the talking. Let's just look at how we present the solution in relation to that. And for reference purposes, this question is from the practice note by the Ghana Revenue or the Commissioner General of the Ghana Revenue Authority. So for reference purposes, make sure that I give respect to whom respect is due and honor to whom honor is due. So this question is from that document. So 2017 year of assessment, what do we see here? In 2017 year of assessment, there will be no branch profits. So because they actually made a loss of 500,000 Ghana cedis. However, the loss can be carried forward and deducted from the profit in 2018. They can also carry forward losses for a period of 5 years in that case, depending on the agreement they have with the tax authority or the regulatory bodies. So let's see what happened in 2018. So in 2018, they are declaring a profit of 3 million Ghana cedis. And then I told you that we have to what? Add back the depreciation. So we will add back the depreciation. So when we add back the depreciation, we're now going to have 3,015,550 Ghana cedis. Then the agreed capital allowance will be deducted. Okay, the agreed capital allowance will be deducted. so that we will arrive at the adjusted profit. And the adjusted profit will become 3,700,000. 3,700,000 Ghana cedis. 3,700,000 Ghana cedis. So in the year 2017, they made a loss of 500,000. Now in the year 2018, they made a profit of 3,700,000. That's the adjusted profit. So no, 3,700,000 Ghana cedis. Gotta be careful with the figure. So what do? We can less the loss of 2017 from this profit. So we will less the loss brought forward of 500,000. All right, we less the loss brought forward of 500,000, and then we'll be left with adjusted net profit of 2,500,700 Ghana cedis, and that will be the adjusted net profit. So on this net profit, the branch will pay a tax at a rate of 25%. So the standard tax rate of 25% will be applied on that particular figure in relation to that. So we apply the tax rate on that, and the tax that they are going to be paying for the year is going to be what? 625,175. So 25% of 2,500,700 Ghana cedis will be 625,175 Ghana cedis. So when we now deduct that tax from the adjusted net profit, we now get the net profit after tax for the year 2018. And this is our net profit after tax. So this is our net profit after tax. Are you getting the concept? Net profit after tax. 1,875,525 Ghana cedis. So on this net profit, which is the branch profit after tax, we will now charge a withholding tax of what? 8%. Are you getting the concept? We will now charge a withholding tax of 8%. So we take 8% of that particular figure that we had here, which is the profit for the year. And so 8% of that, and that is what leads us to this particular figure that will be given to the Commissioner General, and that is 150,042 Ghana cedis. 150,042 Ghana cedis. So that is what you have to understand when we talk about the issue in relation to branch profit. Remember, the first scenario was direct, it was straight up. We didn't have to think about anything. We just went ahead and we looked at it in relation to that. But the second one had loss brought forward. And so remember that we added the depreciation back, we less the capital allowance, we less the loss brought forward. So assuming we less the loss, and the loss was not able to even cover up all the adjusted profits, that means in 2019 also, in 2018 year of assessment also, we wouldn't have had any profits in relation to that, okay, because the loss will be carried forward continuously in that case. So that is also how we deal with the withholding tax on branch profits. So if you have any questions on clarity or whatever it is, you can put it in the comment box, right? So let me take off all these and then let's look at the next slide. Then the next thing here is withholding tax on petroleum operations. This one is also not for level 2 students. So level 2 students, if you're writing principle of taxation, this particular one here isn't for you in relation to that. But level 3 students, it's something that you need to be looking out for in that case. So whatever payments that are made to contractors and subcontractors under the Tax Act, whatever payment that are made to contracted and subcontractors, we are supposed to withhold tax when making any payments to them in relation to that. And the rule is very simple. We will look at, like I said, their ratios or their rates very well in relation to that. Mining and mineral operations also the same thing. A company that conducts a mineral and mining operation shall withhold tax under any section of the act, under the relevant section of the act. A company that conducts a mineral operation shall withhold tax at the rate provided. We'll look at all of these. This does not apply to the following: payment made by individuals unless made in conducting a business, payment made by the holder of a small-scale mining license to a laborer with respect to winnings from the area covered by the license, or payment received by the holder of a large mining lease in relation to that. So these are also what we must understand when it comes to dealing with the issue about withholding tax for mining and mineral operations. So any questions for me, please? Any questions for me? I'm going to be concluding our discussion today here. That's the part one of the withholding tax. And God willing, tomorrow we're going to be continuing with the issue in relation to payment to non-residents, payment to residents, and other obligations. Then I will look at the various rates that we need to look out for when it comes to dealing with the issue about withholding taxes. So if there are any questions you have, you know what to do. Put them in the comment box, and I'm going to be reading all of your comments in relation to that. So if you have any questions, I'm here to answer any questions the next few minutes, and I will be signing off in relation to that. So let's see if there are some comments here. Okay, so I see a question from Halem Hussein. Now, in case I don't mention your name well, please forgive me, okay? Halem Hussein said, please, in the earlier example, I can see that we calculated two different taxes, 25% and 8%. Yes, the 25% is the corporate tax, and then the 8% is the withholding tax. Are you getting the idea? So the 25% is the corporate tax. That one they are supposed to pay it because of the business that they have done. But because they are branch and the profit will be repatriated, we need to withhold a tax of 8% as well on their profit after tax, which is what will be repatriated also to the Commissioner General. So one is their corporate tax, the 8% is the withholding tax on the branch profits in that case, because the branch profit after tax is what they will be repatriating. So Halem Hussein, I believe you get the explanation in relation to that. Any other comments for me? Any other comments for me? So like I said, I'll be concluding here today on the stream for withholding tax. This is part one. And God willing, tomorrow we will be continuing with the part two of this. Now, for those of you who are doing principle of tax and advanced taxation, today I did a live stream on YouTube talking about corporate tax liabilities. That one too, I did part one. So after watching this stream, you can go to my YouTube channel and go and watch that video as well. And remember to subscribe to the channel and continue to share the video so that if I go live with content like this, you will be the first person to be notified. And share the video as well with your friends, your colleagues, your loved ones in the offices and on your WhatsApp platforms, on your Facebook pages. Share it. Let's reach as much students as possible so that we can together help each other, right? Because we understand that many of you are studying on your own, and that is why I need to come your way and provide you with some assistance and answer any questions that you are having as you prepare for your examination. Okay, so I see another comment. Let's see it. All right, Halem Hussein said, yeah, thanks. Okay. All right, you're welcome. You're welcome. Okay. So thank you very much for joining the stream today. Very much excited for coming your way every day in order to assist you to prepare well for your examination. My objective, as always, is to provide you with with content on various subjects, on various topics, so that you can prepare well for the examination. That is my objective. That is my desire. That is my ultimate goal. In return, all I want you to do for me is to study very, very well for the exams. And as you study, another thing I want you to do is to share the video. All right. Subscribe to the channel, my YouTube channel, and follow me as well on Facebook. Every single day, 4:30 p.m., I'll be live on Facebook and sorry, on YouTube. I'll be teaching on YouTube. And then at 6 p.m., I'll be live here on Facebook and also will be teaching. So from 6 p.m. to 7 p.m., usually I'll be live on Facebook here and I'll be teaching and I'll be answering your questions as well for you in relation to that. Okay, so I see a question from Miles Green. Miles Green said, please, in respect of 2,000 currency points, how do they trace that? I've actually purchased goods cumulatively to that figure, so that you will have to pay the withholding tax. Yes, cumulatively to that figure in the year of assessment, it should exceed 2,000. So if it is exactly 2,000, you may be exempted. Okay. Sorry. So if it is exactly 2,000, it may be exempted. Okay. So Miles Green, if it's exactly 2,000, it may be exempted because it should exceed 2,000. But if it hits 2,000 PPP, it will be exempted in relation to that. So Miles Green, that is the answer to your question. I think you were commenting that I should answer your question before leaving. So I believe you get the concept there. All right, so that is it about that. All the best. Now, remember, coronavirus is still here, and Ghana, as of today, we have close to, is it 3,100 cases or 3,093 or so, or whatever. But the cases are rising. So please make sure you take care of yourself. When you go out, make sure you wear your nose mask or your face mask or whatever it is. Make sure you sanitize your hands regularly. And most importantly, make sure you wash your hand also under running water. But in the midst of all of these, please make sure that you don't stop learning, you don't stop advancing yourself. Because at the end of the day, your advancement is what is required in order for you to win in this period of the coronavirus. Okay, so you make sure that you take care of that. Miles Green said, and please, I want to know who actually suffers the withholding tax. Is it the buyer or the seller? Is the seller who suffers the withholding tax? So if I bought from you and I am paying you, right? And I'm supposed to pay you $100,000. I won't pay you all the $100,000. I have to withhold a percentage based on whatever rate of percentage that we are using, whether it is goods, services, or work. So you won't receive the 100,000. That is the value of the goods, the gross amount of the goods. You receive less than 100,000. So it is the seller who pays for that in relation to that. But you will also be charging me VAT. So I am the buyer. I'm going to be being incurring for VAT, and we'll be looking at VAT later on as we continue with our discussion. So whilst the buyer suffers the VAT, the seller will also suffer the issue about withholding tax in relation to that. In either case, both are remitted to the Commissioner General in relation to that. So Miles Green, that is the idea about that. So thank you very much for joining the stream. Miles Green, you were on YouTube with me, and you jump on the stream as well here. Thank you very much. So continue to share the stream with others, and let's be able to reach as much people as possible. I'll meet you same time, God willing, tomorrow, 4:30 p.m. on YouTube, as we continue with corporate tax liabilities, and 6 p.m. here on Facebook as we look at the part two of the Withholding Tax Administration. All the best. Take care of yourself. Stay safe and stay blessed.